Hi there, I'm Dean Heskin. Thank you for joining us for this most recent episode of our podcast, The Secret War on Cash, as we take a look and discuss the changing developments in our financial markets, our economy, things going on with our currency. The list goes on and on. I have with me my frequent co-host, Chris Agelastos. Chris, how are you today?
Well, thank you. Good to see you.
You're looking good. In fact, if you're wondering why my face is so red, we live here in the Valley of the Sun, and I just recently, like an hour ago, had a somewhat of a medical procedure done on my face to help protect against all the things that the sun does to your skin over time. So, for those of you who are viewing, I apologize for my red face. For those of you tuning in, it doesn't look any different than normal. For those of you who are listening, I should say. Well, Chris, let's get right after it today. We're talking about a fun topic. It seems like we've been watching a fair amount of what I'd like to call positioning being done in the markets this year. Two areas in particular has been a lot of insiders who are selling some pretty sizable positions of their insider stock, and the other being the continued buying that's being done by central banks as they continue to gobble up gold. These are two very interesting things that are happening. Is they are typically the type of moves that reflect what those who are presumed to be in the know, when you watch what they're doing, and they start taking these type of actions, they think or believe that a change might be coming. That would be what most people would take away from that. Insiders don't typically sell stock that they think is going to continue to go up. And central banks don't take the type of significant positions they are taking in gold unless they believe there's a need for some kind of greater future stability. So these types of moves can be especially unnerving for people like you and I when you look at it from the perspective of all the uncertainties that have been building and that continue to grow in our markets and our economy as a whole. Now, a positive to this, according to Citi, as you can see on the article on your screen, or in the link for those of you tuning in, they're expecting significant gains over the next year or so, as it pertains to the price of gold and oil, as I mentioned here in this article. Gold hitting a price of $3,000 an ounce and oil at over $100 a barrel. Now, as we are recording this podcast, today, gold is at $2,024 an ounce, so $3,000 would be a substantial move. And oil by the barrel today is $78.27. So at $100, that would be a substantial gain as well. So, Chris, do you think Citi could be right on this one?
Yeah, I mean, they're actually being somewhat careful in what they're saying. They mention three specific triggers that could cause this to happen. One is central banks continuing to increase their buying, which they've done for, I think, the last 3 years in a row now or thereabouts. So that's already been happening. And so, again, if that continues to go this year, that's one major trigger point. A global recession, that's another, which a lot of people already say we're in one or in the beginning stages of one. Certainly many in Europe agree. And then the third being stagflation, which would essentially be increased inflation, which we've seen quite a bit of lately, continued rise in unemployment, and a drop in economic growth. So I think most people would say, okay, any of those things are possible. Now, what's key is they aren't saying here that all three of those things need to happen to push gold to this, 50% increase up to $3,000 an ounce. They're saying any one of those things, solidly taking place could cause this to happen. So I definitely think there's a very fair chance of it. The good news is they said that worst case scenario, if none of this happens, they still expect it to go up by a little more than 7% this year. So there really isn't much of a downside, at least that people are predicting in the gold market, and certainly a lot of upside potential.
Well, that's amazing because, as you said, only one of the three could happen in order to cause that kind of a spike. But yet, as you're talking about it, you almost would fully expect that all three of those things are going to happen. I mean, that
Yeah.
if they didn't all three happen,
Yeah.
that would in and of itself would be a good prediction, or a shock, I should say. So
Yeah.
that's a crazy, and it just goes to show like how much pressure has been building in this financial system of ours. And at some point, and it seems like we've been talking about it for a long time, as have others, but at some point something has to give. And that's why I say, I mean, one of them, yes, but I wouldn't be surprised if we saw all three of those things develop or take hold
Right.
in the course of the next year. Now, the next article definitely provides a lot of support of Citi's projection. As we just touched on it here a second ago, the central banks continue to buy up gold at a record pace.
Hmm.
The type of buying that they're doing in the tonnage, that is,
Yeah.
can only help move prices, as the supply out there is literally being gobbled up like never before.
Hmm.
They're doing so in large part due to geopolitical pressures. That's highlighted in the article on the screen. And those pressures, like we just mentioned, they're growing greater and greater by the day. I guess, Chris, like the tied to the pressures and all the nuances and uncertainties surrounding this, we also have this newly formed BRICS alliance,
Hmm.
um, that they're taking major positions in gold. They're talking aggressively about de-dollarization, getting rid of the U.S. dollar. They love nothing more than to kind of break that chain that has been going here for a while. I mean, Chris, overall, are you seeing any reluctance on people's part to buy metals right now, or are they paying attention to what these central banks and big money investors are doing and getting themselves diversified into metals?
Well, some people are certainly paying attention, and I would say people probably, watching or listening to this podcast are trying to stay in tune to what's going on, and so they may be, more aware and less reluctant, as you say. But I think that there are two big groups of people out there that currently are either not paying attention to what is happening. Maybe they'll catch the average, headline on the evening news type thing, but they're really not digging into what's happening in the economy, what's happening to the value of the dollar worldwide, BRICS, all these other issues that we talk about quite a bit. And then you have this other group that maybe is watching, but they're trying to time the market, meaning, the stock market overall has done, pretty well the last several years, in spite of a lot of these negative things going on. So I think you do have some people just trying to sit in the market and not get out until they have to. But the problem with that is that, by the time it's often too late. And I would encourage people to really pay attention. I always say, watch what people do, not what they say, right? And the central banks buying at record pace, these insiders, selling large shares of their stock and getting out of the market. What does that tell you? It tells me that maybe I need to protect some of my assets, shore things up. That's why we have a safe haven in gold. And why bother trying to time the market? If you've been in the stock market, you've probably already done well the last several years. If you listen to these articles that we're talking about, gold is expected to do 7% if things are normal, and up to 50% growth if we hit a major crisis. So there's really no downside. I would say it's better to position yourself securely now while you still have time, rather than waiting till the last minute and hoping you can get something done in time.
Right, right. Well, in diversification, a well-balanced or diversified portfolio is done for just that reason, to provide balance. It's not so that you have every single position in your portfolio that is appreciating, at a whatever pace or whatever rate.
Right.
A well-diversified portfolio, at times the equities might be doing better for you, or at times the metals might be doing better for you, or at times the real estate could be
Mhm.
any combination thereof. But a reason I mention this is that what is interesting, certainly, at Swiss America, as we deal in metals, and positioning clients, profitably and successfully into this marketplace over the course of 42 years. And in my 32 years of being here, I can't think of a time, and even putting all bias aside, Chris, that I don't know if I have seen in the last several months, maybe a year or so, a single article or commentary that's being written suggesting gold prices are going to go down. I haven't seen
Right.
anything like that.
Yeah.
And the significance being is there's always two sides to every argument, two sides to every coin, if you will.
Yeah.
But you really are not. There has not been a single commentary, and I'm sure there is something out there that exists, because there's always somebody who plays that antagonist role. But by and large, anybody who's been worth their salt over the last, let's call it, year, has come out and been very vocal about the fact that they feel that metals prices are going to take off. And what's interesting, it's not just an investment play. It's more of a reflection of, like we've been discussing here today, the geopolitical side of things, what's going on, with currencies, what's going on in financial markets as a whole. So from a timing standpoint, not only do you have the masses in terms of talking heads saying you should be getting into gold, but what doesn't hurt is they're all pretty much saying as well, get into gold because we think this market's about ready to explode.
Right.
So it'll be an interesting thing to watch. And it's, I think the timing of it is, we might even start to see moves sooner versus later. And we'll certainly on our podcast here be discussing that as it occurs. For those of you tuning in, we appreciate it. If you have not subscribed to this podcast, please do so. Tell your friends, have them do so as well, so we can get this word out and keep you informed, keep your family, your friends informed. As certainly there are a lot of things that are taking shape here day by day by day that will have an impact on all of our lives. So, Chris, thank you so much. If you haven't contacted our office, please feel free and do so. You'll see the toll-free number. I'll give it to you, 1-800-289-2646, or you can visit us online at Swiss America. That's SWISS America, all one word, .com. Thanks again, Chris, and we will have you back here soon. And if there's anything else that we need to report on, or if there's anything that you have an interest in, for those of you tuning in, leave us some comments, as we'd love to cover those topics as well. Have a great day.
Take care.